Good morning, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video. Today, it is the ECB day, folks, and it is all about the European Central Bank and its monetary policy. But why it is so important for traders and investors is because today we are expecting enormous amount of volatility for the euro and for European indices as well, because what the ECB will say, it is going to impact the euro, the DAX, the CAC, the FTSE MIB, the Stock 600 and the Stock 50 as well. So this entire space of equity and forex market is highly likely to be influenced by the European Central Bank's decision. So let's have a look and discuss what is really expected from the ECB. Well, the anticipations are the ECB is going to be coming out with more dovish tone. Remember, Mario Draghi, he used to control the entire narrative by just using his words and less action. And that is what is expected from the new president of the European Central Bank, and I'm speaking of Christine Lagarde, because inflation is lifeless in the EU. And the economic recovery has been all over the place. The reason that I'm saying this is because yes, the second quarter numbers were enormously abysmal and the third quarter numbers are likely to remain immensely volatile because the readings are all over the place. One week we get a better reading, followed by that we get a little bit of a dismal reading, and that influences the entire space, and that influence is an adverse influence for the European stock market and for the European economic recovery. This is why the ECB needs to do something, because it is also worried about the euro. Now, speaking of the euro, the currency has been trending to the downside for the last few days. Now, what is the strategy here and how can we really make a sense of this? If the ECB comes out today with quite a lot dovish statement, meaning it lowers its inflation forecast and it doesn't acknowledge that there is a gradual recovery in the Eurozone, that means euro is likely to fall. How bad that can be? As you can see in the chart, the euro is trading in around 1.18 and it is trading above its 50-day simple moving average on a daily time frame. Now, if the dovish stance continues and if the ECB says that yes, we are lowering the inflation forecast, this move can extend to the downside all the way to 1.1650, or perhaps even lower depending on the words the ECB will use today. Now, on the flip side, if the ECB acknowledges about this gradual recovery and doesn't show too much concern, anxiety, anxiousness about inflation, but just a bit of a qualm, then expect the euro to continue its rally to the upside. So the levels that we are seeing where the euro is trading right now, 1.18, could look like a massive opportunity, because the euro will continue its journey against the dollar, because dollar is based on a very dovish monetary policy. Remember, the Fed has said several times it is in no rush to increase the interest rate. Speaking of the interest rate, what the market is expecting from the ECB is that the ECB perhaps could drop some hint with respect to pushing those interest rates even further in that negative territory. Currently, these interest rates are sitting at 0.5%, but the anticipations are that the ECB may push this interest rate by another 10 basis points. And folks, that means lower costs on the mortgage, nothing at all on your savings, if not paying the banks in terms of your savings, especially in the Eurozone I am speaking of. And that on the back of the hope that yes, this lower interest rate perhaps can yield a better outcome for inflation. But we haven't seen the results of that over in Japan, because Bank of Japan has been on this policy for a very long time, and the results are not what the bank anticipations were. So let's have a look at the equity market. Now, if the stance is dovish, expect the stock 600 to perform well. Expect the DAX to continue its journey to the upside. The current weakness that we have seen this week could really look like a fabulous opportunity to get back into the space. But if there is a bit of a hawkishness in the monetary policy stance that the bank is going to come out today, then there is a chance that the DAX could actually retrace, and this bounce that we are seeing could really look like a dead cat bounce, and the DAX could really move to the downside from here onwards. If you wanted to learn a little bit more about how to play this strategy in terms of our technical levels, I have done a separate technical video where I've discussed the levels and how to really play with two different strategies as the bank comes out with its monetary policy. That's all for today, and see you guys next time.